this so eraser, I can just erase this. Yeah, thank you. So welcome back, everyone. We were still talking about the NASDAQ, what actually forms the NASDAQ companies. So go to my previous tab here for those who missed this important information. So we were talking about the NASDAQ, that NASDAQ is actually a combination of 100 companies in the USA, right? So those companies, when you hear about Apple, right? Apple, you know, the iPhones, the MacBooks, you should know they fall part of this NASDAQ. The Microsoft Corporation, the Amazon, the Meta platforms, we actually refer to Facebook, the Tesla, the Google, the Netflix. When people actually watch this movie every night on Netflix, they're actually taking NASDAQ rise actually to also go up as well. So talking more about PayPal as well, guys, not forgetting PayPal. And you see how many they are right here. The T-Mobile USA, the Booking Holidays. You see, these are 100 companies which forms part of NASDAQ. The Airbnbs, when this rises, also they take NASDAQ up. So that is why most of the time, technically, you find that NASDAQ most of the time continues to go up. Why? Because the fundamentals are good. And when fundamentals completes technicals, then it forms something else, you see. So whenever you hear that, okay, Twitter did good, you know, Twitter also formed part of this, the Facebooks and all that. So, you know, they all fell under this portfolio of NASDAQ 100 companies. And that is actually news for you. You understand? When you hear of all this, look at the price. Some of them, many here are increasing. Just take a look. You see here, which the one with the green colors here. This actually increasing. This actually increasing. So they're actually doing good. They're actually doing good. So technically, I mean, fundamentally, that is why you actually saw NASDAQ trying to push upwards, you know, since yesterday from and today as well. So, but we talked about the market crash, which is very risky now, right? So this is it, guys. So looking at Dow Jones, Dow Jones is US 30. So those who wondering what's this Dow Jones is actually US 30 stocks. So Dow Jones is actually the industrial, all right, is the industrial. When we talk about the industry, that side, let me show you the companies for Dow Jones. So normally, if there are new jobs created, you find that the new jobs created in this industrial areas, you know, oh, US 30 is likely, US 30 market is likely to go up, you see. So here are the companies for Dow Jones. So they're all sorted by weight, right? They're actually weighing on this US 30. So when we talk about the Dow Jones companies, we're talking about the United Health Group Incorporation, the Microsoft Corporation, the McDonald's, you know, the Honeywell, Caterpillar, Apple as well, Nike, you know, the Nike shoes. So the good thing about the Nike, you know, they're always making sure that they are developing. When they hear about metaverse, they're going digging deep, gun blazing, making sure that they want to get in the game as well. So in the metaverse, guys, we will do a separate topics. You will be able to understand, right? So, but now know that the Nike is there. They'll be selling you or your avatars, those cartoons, your clothes, the Nike clothes, right? Because we are moving into metaverse universe. So, but to cover that in the next topic, you don't need to worry. So that I don't complicate you with a lot of information on this single session. So Disney company, they're also under the Dow Jones. The Coca-Cola is also under Dow Jones. When you hear that Dow Jones, remember it's industrial, right? those people who are working at the industries, at the farms there, at the Coca-Cola. So when there are more jobs created, it's a good news. It's a fundamental good news. Oh, it's a positive news. Then the market is likely to go down. The Dow Jones market is likely to go down because there is positive news. There are new jobs created in these industries. So I hope you noted that, guys. So it's very important. So I also want us to look at the markets. So this is the market. It's your trading market. It's a platform, right? So most of you who are still new, make sure you have downloaded your MT4 so that you can see the market overviews. You can be able to see the performance on US30. You'll be able to see performance on other currencies, indices altogether, and which is very important. So looking at Dow Jones, guys, this is 15 time frame. So I'm a long-term trader. So I look at the market at the full overview, starting from 1 month, the performance, especially when it's towards the end of the month. It's very important to know how the market is likely to close at that certain month. So let me try to zoom this so that people can be able to see. So this is Dow Jones monthly performance. You see, it's still trying to still bullish. You can see it's still bullish, meaning it's still up in price, right? But look where it is coming from. This green candle. Look where it's coming from. Let me do it all together. Let me do the full overview. I want you to see this, guys. Look at this. It's monthly candle, right? But look how it has dropped from the top up to where it is in a month. This candle hasn't closed yet, so it might even close, it might even, go even down, So, because when is today's date? Today's date is the 22nd. And then this candle closes at the end of that month, at the end of month. You see, on the 30th, if it's the end of the month, it will be closing. But what is interesting is this was once a full candle, meaning when the market was here, it was actually performing very, very, very good. Whether it's fundamentally, because remember I gave you a signal, I think last week, guys, in the VIP group and also in the free groups as well. I gave you US30 signal and it went from this length. This is a monthly candle, remember, by the way, from this length, and it tapered down there. So most of people made 20,000 with just one signal and with proper risk management of 0.01 lot size on one trade, on single trade. So imagine if you took 5 trades. So imagine it means you have 20,000 on each and every trade. So it means you have 20,000 times 5. Imagine. You see, so we gave that in a free group. The people who took signal make money, and those in the VIP, we gave you also the Nasdaq signal as well. It did good as well through that performance because we were analyzing it with a high time frame. We are analyzing it with a weekly time frame. So let's look at the week. The next highest time frame is the week 1, right? This is weekly time frame. So each and every candle you see here closes every week, after every week, you see. So this candle here is last week signal that we gave you guys. You see, the market went from here up to here. So that's why people who got in here, they made 20,000 up until here. So we hold it full until that week. So a lot of people made money through this US30 signal. However, what caused that Because obviously this candle, if you remember this candle, this green candle here, is when the FOMC was taking place. And the market actually was positive because of that man I showed you, the Jerome Powell, said some positive thing that they won't increase the interest rate this year, but they will actually increase the interest rate next year, you see. So that actually caused the market to react in that particular thing. So let me see, resume with the share. So that is what caused the market to actually go up in positive. So it went straight up on that day. But then the following week, then we waited. We didn't take signal on that because here a lot of people blew their accounts. You know why? The market was actually just going up and down and waiting for closing. It was actually beating people up and then down, beating people up and down. It was just going up in ranges. I'll show you in lowest time frame. You see, so a lot of people blew their accounts here. A lot of people lost their money here. And still, even if there are people who made money through this FOMC news, then the market the following week, if you are still in the market, they took all those people's money, 50%, if you can see, 50% of the money, it was taken, you see. So even more because of this green candle that you see here, actually went down here and then it came back with a spike, you see. So you see the market gave people the money with this full candle and then came back, took everything from them, everything, because it actually came this close. You see here this spike. It means that the market went down, but then eventually the buyers took control of the market and then created this spike. You see, so we only gave this signal because we did understand that if the fundamentals were positive at that time, but we know for actual fact that there are signs behind that the market, can go down. We know that it was just a statement that they just wanted to control the market to go up. You see, that is why the next week the market actually went straight down. So let's go to day one time frame. Day one time frame. So each and every candle here closes each and every day. So you see this candle, it's still up running. So at around 12 o'clock, this candle will be closing. You see, it closes each and every day. So this is yesterday's candle. This is which day is today? Is Wednesday. Okay, this one is Tuesday's candle. This one is Monday. So this was Monday. The market opened in red. It was actually dropping. So those people who took the signal we gave last week, they were still eating this Monday that we came from. You see, so the market only went up in Tuesday, yesterday. You see, it only went up yesterday and it's still here. But look at the whole overview from day one. You see, with the whole trend, look at the whole trend. So that is why we say from the 26th of December, we might actually see the crash, because market here actually it's going up, but then it didn't go up as where it's coming from since it crashed. Because if you check, the market went up this high, 36. Let's check the higher high. Let's check the higher high. So we can see clearly. So here's your higher high, you see. So it still didn't come that, it didn't break that higher high. It's still below. If we check this point here, this was the last previous high, right? And then it failed to break. It stayed below. It went slightly down, and then it rose again through that FOMCs, but still last week, it closed beneath this area as well. So you see, it's actually dangerous to actually buy now because of, the market might drop from here. Look at the trend, look at the previous highs where the market failed to break. So unless if there are good fundamentals, but I doubt if there are, there would be good fundamentals, because usually during this market crash. The banks, like I told you, they usually print a lot of money. But in this case, they do not have that resources to print, to keep printing a lot of money, you see. So that's one of the things that we're talking about here. So let's go to our 1 hour time frame. 1 hour time frame. So each and every candle here closes each and every hour. So what is the time now? The time is 9:55, right? So after 5 minutes, this candle here, you see this candle here, it will be closing. So usually the market, they love tricking traders, you see. So that's why I say, guys, learn different strategies. Candlestick alone won't guarantee you, a position, but it will help you. But also understand the trend levels, understand the resistance levels, understand your support levels. You see, so how to analyze the market. So let's start with this Dow Jones, right? So here is your Dow Jones, guys, right? And then here is a new beginner who just got into the forex market, who only studied, what we call the who only studied the candle Bible, right? So already when you are here, right? When you are here, I'll also send that candlestick Bible, guys. So you see here, let me try zooming it even deeper. You see this red candle here. There was another candle, the green candle here. This is how to study candlestick. Listen. So this long candle engulfed the red candle, right? It means it closed above this red candle here. You can see the red candle is smaller, and then there was another huge candle which was bigger than this red candle. You see, so this, when you see this in the candlestick, they will teach you that this is actually what you call the engulfing candle. So you usually when this happens, you know that the next candle must retest where it engulfed. You see, so here's your candlestick, right? It has its body. So this body, this, let me zoom. I'm not sure if you can be able to see it clearly. So look at this, guys. This candle here, right? Let me do it this way. This candle here, here's the body. This is the body of the candle, right? And then this spikes here, or this little lines that you see here, it's actually, the closing. It also forms the part of the closing and the opening of the candle. So you need to understand, the total body of this. So I'll also send you the full PDF, guys, to study this thing at your own when you are free, because they will actually help you understand the market, how it is moving, why the market's going up, you see, which is very important, because here the market closed above this previous candle here. You see, it's bigger than this one. So the next one, it must retest from this previous close. So you see, it's retesting exactly on this line. So let me put a line. So it's retesting this previous closing of this candle here. Let me put it this way. This candle here, you see, is retesting exactly where it closed previously. So its opening started from here. It actually went down and then tested this level, and it closed in above this one. You see, so that's why the market continued going up from there. So when this likely happened, you need to understand your trend lines levels. What do we say when we say this is a support level? What do we mean when we say this is a resistance level, right? So Let me do this quickly and show you my support level. So it's important to also put your own lines where the market is actually reversing. So you see here the market reversed at this level. You just put your level, your current line here, just to indicate that, okay, I understand that the market reversed at this level. So you're actually looking forward to see what will happen next when it come to this position. You can even extend it. It's 10 o'clock. You can even extend it this long. Then you know that in the market, every time, right? Every time we will look at the previous to also confirm that every time, most of the time in the market will likely to come back at this position and do what we call the second touch. You see, just to retest this level again. So it's a big fat W. Whenever you see W at the bottom, you know that your W, you buy, right? You buy at the bottom. Right, so let's go previously and check our W levels to confirm what we're saying is very true, right? So look at this. This is your W here, right? It's at the bottom. And what did happen? The market went up. You see? Let's go to the previous one again. Here is it again. It's your W. And what happened? The market went up. And normally it will also retest first the breakout. Because if this is the W, then you know it must have a, I mean, you know this. Let me put this line so you can recognize this. If this is your W, then you just put your line here. On this very closing of this candle. Then you know the market would actually come back and retest this level before it even go further up. So that is why the market came on this point again to retest where the market broke out of this level. You see, so it's your W. The market broke out from this level and then it came back again to retest, right? So it retested again and then it went up. So always when you see your W, always respect or wait for the retest of the breakout of that level before you continue with your buying, right? It's one of the things that you can look at, and let me try zooming again. I know it's late, guys. You want to sleep. At least tonight you'll sleep, very peacefully. You'll even dream about the chats. So you create your memories in the dreams. Just control the market. Make money in your dreams. When you wake up, continue making money. Make sure you understand. So I also talked about understanding different time frames. A lot of people, what we call the scalpers, we have people in the market that we call the scalpers. These are people who trade with this time frames, 1, 3 minutes, 5 minutes, this time frame. They trade with this time frame. So let's look at M5. M5, it's 5 minutes candle. So each and every candle here closes every after 5 minutes. You understand? So these are people who are scalping, right? They get in the market quickly and then get out at the same time. You see, so you find that they get in here and then they are out somewhere here. They look for another opportunity somewhere here and they are out here. They look for another opportunity somewhere here and they are out here. You see, those are scalpers. But you need to understand what is your time frame. You see, so if M5 trader saw a W somewhere here and then they know it has confirmed, then they know, okay, their entry level is here, and then they will actually get in the market and hold this trade And then when they see the confirmation of market dropping, they get out quickly and then look for another opportunity somewhere here. If they see then another W, if they confirm it, then they're likely to hold their trade and get out after a few minutes. So you need to understand yourself. What are you? Are you a scalper? Are you a long-term trader? Are you a swing trader? So you need to understand yourself, right? So we also have what you call the day traders. The day traders, you find that they trade with this 15 minutes candle up to 1 hour candle. You see, with the 15 minutes candle, these candles, all of them, they close each and every after 15 minutes. So they know if they got in here and they can hold a trade, for above an hour, so or 15 minutes, and then they're already out of the trade. They actually day trading, you see. So other people as well, they have what we call the swing, that we call them the swing traders. The swing traders are the people who are trading 1 hour candles up until the 1 day trading you candle, or even a week, because of swing traders, think of them as also people who can trade or hold a trade for 2 days. You see, those are swing traders. So swing traders, you find that they analyze the market based on 4 hour time frame, you see. So let me show you something. Let's zoom the market. They know if maybe they got a signal somewhere here, right? Let's say maybe they analyze their few W's or second touch, then they can hold a trade for weeks, for more than 3 weeks, for more than 4 weeks. The market will actually drop with them and they will still be holding. You find that they entered here, right? And they made maybe 10,000 up until here when the market is here. Then the market drops again. And then maybe it takes minus 5,000, and then maybe they're only left with 5,000 by that time. But they will continue holding that loss until the markets come back to their area again. You see, so you see they haven't actually lost anything, because he got in here, they hold the trade, they made 10,000 up until this point. The market reversed to this level, 50% off or even 80%. You find that trader who got in here, they only have maybe 2,000 from 10,000. You understand? But they continue holding. They do not close the trade. The trade is still open. They are still holding it for weeks. Then the next week, maybe the market went up. You see, they are still in the game. Their trade is still running. Then they are making money. Still, they came back to this point. You see, some of the money came back, because if it was 10,000 at this level, then on this level, maybe they're holding 8,000. You see how it works. Patience in the market is key, guys. Patience in the market is key. So, but you first need to understand your own time frame. What are you? So if you're a long-term trader, you continue holding your trades because of what you analyzed in the beginning, that the market will actually go to that direction. But you understand that at some point the market will come back and retest that level where it broke off, you see, and you continue holding, you make money. So Forex is not gambling, guys. Forex is not gambling. It's about taking money from those who are impatient to those who are patient. You see, it's about taking money to the patient ones and giving money to those who are not patient. So that is how it works. It's like peer to peer. Because now, if you got here, right, the market maker, they gave you money to this level, and now they're coming back to very same point that you entered. If you entered here, they came back very same point that you entered. You see, they took the money from the buyer and now they gave it to the seller, right? And now they're taking that money from the seller, they're giving it to that buyer. You see, so that's how it works. That is how it works. So you need to understand trend lines. You need to understand these candlesticks, because it's a language on its own. It's telling you something. So understand these candlesticks as you're understanding or learning Japanese language. You see, it will tell you something. You see some of the things. So here, um, also you see here is a railway track, or what you call in the PDF, yeah, the railway track. Here is a double reversal, right? The candle here was greener, it closed green, but then the next one closed exactly where that other one closed, but it was red this time. And then this market continued going down. You see, so once you understand the candlestick language, you'll be able to identify the reversal areas. In the candlestick, you find that this also is there. The morning stars and the evening stars. They actually teach you to see the reversal areas. So when you see something like this, you know, okay, oh, I've learned about the morning star, I've learned about the evening star in the PDF, and whenever I see this, market is likely to reverse. You see, so then you also identify your support level. So let me show you what is support, and let me show you what is a resistant level. So let's go to our 1 hour time area, time frame. So this is simple, guys. Look at your support areas. You just put where the market was actually bouncing above, you see. You can consider this as a fake breakout, or you can just even put it this way, still fine. So, but also looking at the previous bounces as well, it's very important, right? So here the market was actually bouncing above. When you put these lines and then you have identified where the market is bouncing, this market is bouncing above. You see, so we call that support area. So, but when the market breaks that line and then start bouncing below this area, then we know that is a resistant level. So it means the price